Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Monday, September 26th, 2016, and this is the Daily Report for Gold and Silver. We have nominal changes in gold today, fractionally lower, but I will call them unchanged on the day. Silver is trading under pressure. First, let's take a look at gold, 1337 and change, with a high of 1342 and a low of 1332. So not a tremendous range, about a $10 range, and that, of course, is spot. When we look at COMEX, 1341, again, down about 60 cents on the day, fractionally lower, we'll call it fractionally unchanged. The low on the day has been 36 and the high 46. Again, a $10 range in the market. Now, the same cannot be said for silver. Silver under some pretty strong pressure, off over 1.5%, off 32 cents at 1949. That is COMEX silver. Of course, we are long at 1930 on this market. We will look to move stops up today. We'll send that out as an attachment to the email letter, which announces that the video is up and ready for viewing. We'll also send it out on SMS text message. Traders, for those who haven't signed up for the SMS text message, please do so. It's one of the best ways to get our trade alerts. Again, as I said, down about 31 cents. Low on the day, 42. High on the day has been 1982. And then finally, silver in terms of the spot market, that's at 1941 with a low of 36 and a high of 1974 and change. So traders, for the second day in a row, since we've seen a pretty dramatic rise in gold pricing, and the dramatic rise that I'm talking about is really coming off of these lows at about 1305, 1308 in that area, and we've identified at least a double bottom here, if not a triple bottom, and you'll see if we can compress it, there is actually another historical place in which gold tested this particular price point, meaning between 1300 and 1310, only to bounce off of that, and that to be a very, very strong support level. However, we've also seen the market stall at different areas. We've got this double top in essence at 1376 here and here, and then we have a top that comes in roughly at 1360 here, and if we carry it over, you'll see 1357 is actually the former top. And what I do not want to see is this market do what we've seen it do, which is hit these tops and then really cascade lower over the next couple of trading days. Now, we have a little bit of difference in terms of the way the market is reacting now to the way the market reacted on this last rally right in here. And that is just following this last rally, we had definitive red candles. They were small-bodied candles, meaning there was a very short range between the open and close, but nonetheless they were red, and we had 1, 2, 3, 4, 5 consecutive days of lower pricing, 1 day of nominally higher pricing, and then 2 to complete that double bottom down here. Of course, we entered the trade just prior to the FOMC making their announcement, so we got in at a good price. We are in roughly at 1317, which puts us right here, and that is the 78% retracement, really, of this larger move here from 1357 down to 1305. So that was kind of that final mark in the sand. Anything past 78, and you really can't have any kind of a bullish model per se. But it was able to actually come down and then really pop back up. And that's what prompted us to get into the market. Now, we currently have our stops just below this price point, which absolutely does not make sense at this point because we've had that tremendous move. So where do we put it? Well, there's a couple of places we can put it to. Most conservative place would be to just move it to 1325, and then 1331 is our 50% retracement. But since at this particular point, I just want to be able to protect our equity, and in this way, if we move our stops up to 13.25. In essence, what happens is we've locked in profits. Now, small profits nonetheless, but we've locked in the inability to lose on the trade, which to me is much more important. Traders, you can go as high as just below 13.31, but I would really keep it right within that area. Again, traders, go ahead, raise your stops up. My suggestion is to raise them just below 13.25. For those that are trading spot, that would be 13.20, because as I say, there's that premium $4 or $5 between spot and most active COMEX contract. Let's take a look at silver. Now, so traders, as far as silver goes, it's been shining twice as bright, but it's been coming down twice as fast. We have seen this market under much more extreme pressure, whereas we looked at gold being nominally unchanged with the equities markets down today and the fact that silver is an industrial metal. Also, there are some factors at play in silver that I can't quite put my finger on, to be quite honest with you, whether you want to call it manipulation or a bunch of cronies getting together and trying to move the market. There's certainly something going on in silver that has been different than what we have seen in gold. But nonetheless, we've got to move our stops and protect something. But where's a logical point? Now, the only logical point I can find is below these lows here. And they come in roughly at about 1928. So you want to move your stop. This, of course, is COMEX futures. You'll want to move it below 1928 on a protective stop, and probably 1920 or 1919 if you are trading spot silver. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.